Hi, and welcome to the Stock Scores Market Minutes for November 21st, 2016. This week's education topic, don't chase, watch the trend lines. I'll then do my regular weekly market analysis and finally talk about the trade of the week on ORIG. All right, so don't chase, watch the trend line. When prices run away from their trend line, they usually come back to the trend line. It's all about fear. The fear of missing out causes us to pay too much, or the fear of taking a big loss tells us that we should sell at the most inopportune times and ultimately sell for too little. As traders, we don't want to chase emotion, we want to profit from them. Let's jump over to arguably the hottest stock of many months, dry ships. In fact, you could say the hottest stock of at least the last year. This stock just went really crazy this week, up and down. But here's what we want to think about. Where were the trend lines? So I'm going to draw some lines on here. At the beginning, back on November 10th, is when the stock started to behave abnormally and started to move. And what I want you to notice is that the stock really was running away from its trend line up here, and ultimately it came back to the trend line. Now then the trend went much steeper. We can define the new trend right over here like this. And then it went really steep and parabolic like that. And again, what you don't want to do is chase the stock when it's way above the trend line, because it inevitably comes back to the trend line. Way up here, way above this trend line, that is a huge caution signal. In fact, this is something I call a bursting bubble candle. When trend has run away, or when prices run away from the trend like it did right here, and again, there was the trend line, and you hit a new high and close below the open, that's the red candle there, that's a real sign that you want to watch closely for a break of trend, which actually happened right here. That was your signal to get out of the stock if you hadn't already, and of course it plummeted after being halted for a day. So that's the concept. When price goes parabolic, when it's running away from the trend line, don't be a buyer. Wait for pullbacks to the trend, because that pullback cleanses the market of its emotion. All right, let's do my normal weekly market analysis. We'll start off with SPY. We'll look at the 3-year weekly chart to begin. Now, where's our trend line? Well, start here, just draw a line across the bottoms, and there you have our trend. Now, we had just broken the trend a couple of weeks ago. That was pre-election. The market rallied back after that. And since that time, we broke a flag pattern. We talked about this last week. And we're now moving up to test the highs right there. Now, we're not quite there. We're very close, but I do think that the market has got good upward momentum in the short term, but it's going to get stuck in around that 220 mark on the SPY. Now, if we take this chart a little shorter time frame, let's look at a 1-month chart. Looking at the 30-minute is a good way to look at this. Now, where is the trend? Well, again, just draw your line across your rising bottoms. Didn't draw that great. We'd probably do it more like this. So we're starting to break this right here, and that's understandable because we're coming into that resistance on the longer term weekly chart that we just looked at. Now, there's still good upward momentum here, but I would be a little bit cautious because we've had considerable gains for the last week or two, well, 2 weeks, I guess. And so we want to be real cautious here because we are hitting that long-term resistance. It was right around 220, a little bit up here. So we're very close to that. And I do think that the market is at some risk to get stuck this week. So you want to be cautious ahead of that. Long-term trend is bullish. Short-term trend, I would say, is on the neutral side. All right, let's take a look at the small cap market. IWM is what I like to look at for that. So I just punch in the symbol IWM. There's the chart. And here we can see we broke through that long-term resistance. And so in that way, the S&P is lagging the Russell 2000, although the Russell 2000 has been lagging for a long time. So we did get a breakout this week. I would say it's a little overbought because, where's our trend line? I draw a line across the bottoms, and I'm way above that right now, and that means short term probably pulls back to the trend line like it has a number of times there. So again, good bullish trend. You can see the stock scores are in a real good place, but we want to be somewhat cautious short term because of that. Now let's take a look at the 1-month chart, and there we have the very strong rally that we've had since the election came. If I draw my trend line, I should draw this in green since it is an upward trend. So there's my trend line. Now we kind of ran away from it here. We're working our way back to it. There is no sign of a break of trend. So even though I feel like you should be very cautious with these stocks, there's no sign yet. There's no breakdown. There's no break of trend yet to be worried about it. I just want you to watch very closely. This is a bullish chart, on both time frames, long and short. It's just also somewhat overbought, and therefore you have to be cautious. All right, moving along to the Canadian market, let's punch in T.XIU up in the upper right-hand corner. That's the Toronto Stock Exchange 60 ETF. And I've been bullish on this market for some time. Why? Because we are in a upward trend. Very simple. We broke through some resistance here. That told us we're probably going to move up to this level of resistance. I'm not drawing that very well, but you get the idea. So we've got some more upside, probably to the 22.75 mark in the next few weeks. No sign of a break of trend yet, so therefore bullish. Now, looking at the shorter term time frame, let's look at the 1 month, and we'll make this a 60-minute chart. And there you can see that we broke through some resistance right here this week. We did that, rising bottoms. So our trends are getting a little bit parabolic. A bullish chart, but watch for a break of that trend because we are getting a little bit overextended. Had a pretty good rally the last week or two, and therefore I always want to be cautious. There's no sign there of weakness. This is a bullish chart on both time frames. You just want to watch for a break of that trend because we've gone up quite a lot already. I like to buy when we break the downward trends, when we break the pullbacks. There's a pullback, break the pullback, that's good. There was a downward trend, break the pullback, that's good. Do I want to be a buyer or an aggressive buyer up here? Not necessarily. I want to be more focused on waiting for the next pullback. Looking at the TSX Venture, the symbol for that is $JX. Punch that in the upper right-hand corner. And there you can see we had a very good upward trend line underway for some time. We broke that a number of weeks ago. We're now in pullback phase. A little bit overextended to the downside. See how it's run away from the trend to the downside. So this week we had a little bit of a bounce back, not a big surprise, but this is a bearish chart because the the longer term trend there, which is held up over the last number of weeks, is downward sloping. Now, does that mean that we can't break this pullback? Of course not. We can definitely break that pullback right there. But until it does, I don't want you to be too optimistic. Now, looking at the shorter term version of this, let's go 1 month. And whoops. Oh, there's some bad data in there, so that's not going to work, unfortunately. We got some bad intraday data on that chart. Let's look at the 6-month daily chart. What you want to look for right now, we're a little overextended to the downside. So you can see that we ran away from the downward trend line, went parabolic to the downward trend line. Now we're coming back up to it, just like we did here, just like we did here. You can see it happening over and over again. But until we break that pullback line, I want you to be a bear on the TSX Venture stocks. Look at the scores on the sentiment score. We're well below 60. That's at a 33. That's pretty negative. All right, moving along to the U.S. bond market, TLT. And there you can see the big break of trend that we had recently. This is a great example of how trends go parabolic. So if we start our line here, there was our long-term upward trend line. That, again, is a 3-year chart. And you can see that we ran away from it here. We went parabolic. We pulled back. And we've actually now broken that long-term upward trend line. So that tells me that the long-term bullish trend in bonds has been broken. Look what happened here. It went parabolic, but it pulled back and bounced off of a trend line, and did that a number of times. This time we've actually broken it. So my best case scenario is we probably go sideways for a while. We do have support here. I think that the bond market has definitely broken its long-term upward trend. It's oversold. It probably can bounce back short-term, but I don't see it going any higher in the months ahead. And that means that basically interest rates have bottomed out. They're not going to go any lower near term. And again, we could get a little jump up in bond prices, which means interest rates will go down a little bit. But the longer term trend of falling interest rates, which has been underway for a very long time, I think is over. Next chart, US dollar, UUP. This is an important one because it really affects commodity prices. So what is our trend on this one? Well, there was the downward trend line. We have broken that. We actually broke it a week ago and we've rallied through. We're now going to come up into resistance up here and get stuck. But I think the US dollar a little overbought right now. Here's our trend lines to the upside. So we're way above the trend line. That means the US dollar is overbought, due for a pullback. I think this week we maybe hit this resistance level and then start to pull back. But the longer term outlook here is bullish for the US dollar. Yes, short term, it's due for a pullback, but longer term, this looks like it wants to move higher. Why? Likely because the expectation is that US interest rates are going to rise, and therefore people want to own the US dollar. That hurts things like gold. Commodity prices heavily dependent upon the value of the US dollar. And of course, we had our upward trend line broken a few weeks ago. I talked about that then. We've then had another break of a trend line there. Looks to me like gold is more likely to move lower than higher. It is at some support here, and it is oversold right now. You can see there's the downward trend line. We're way below it. So don't be surprised if we get something like this. But ultimately, I think gold is headed lower. I want you to be long-term bearish on gold. Now we can take a shorter term view. Let's look at the 1 month chart here. Again, oversold, and you can see a number of times we had these little pull-ups. We broke that this week. It is oversold because it's fallen way from the trend line, but there's no reason to be a long-term buyer. You can maybe trade the bounce if one happens, but I don't want you to be bullish here. Look at the stock scores. They're very ugly right now, so gold is something to really be careful with. On USO, which is oil, there is the 3-year trend. You can see that we broke the downward trend line some time ago. We talked about that back in here. Since that time, we've been consolidating, building a rising bottom. What we now need to see is, do we break out to the upside from that rising bottom? Now, what would cause that? An improvement in the global economy, perhaps some supply constraints. For now, oil is stuck in this sideways range. It's at the bottom of the range where it should bounce. We saw that start to happen late last week, and that is easier to see when we look at the 1 month chart. You can see that we went down to support. We bounced off of it, so there was support. We're now making this head and shoulders bottom on the short-term chart. If oil, and viewing it through the USO, can break to the upside from this head and shoulders bottom, we'll probably move back up to the top of the range, which is good. Short-term, you can trade that. The oil stocks, they can move 20, 30, 40%. Some of those individual small cap oil stocks can move big just because oil rallies a little bit. But I don't want you to think that we're at the beginning of a long-term bull market in oil, because it hasn't broken that longer-term resistance that I highlighted on the longer-term weekly chart. All right, we're almost done. Let's just take a look at the fear index, and then we'll look at our trade of the week. So this is VXX, the fear index. Really, I think less and less becoming a hedge to fear, because people recognize that this ETF really decays in value over time. Look at, we're at all-time lows there. A lot of that is just due to the fact that this thing decays in value over time. I don't like to look at this long-term chart because it's not very accurate. It does decay in value over time. When we look at the short-term chart, however, the spike that we had pre-election, where you really had concern about the market collapsing, I guess, on election results, well, that didn't happen. We're back down into normal range, probably complacent, probably oversold on fear. We may get a little bit of a bounce in fear short term, but there's really no sign yet that the market is worried about anything. All right, so let's finally then look at the trade of the week, and I'm going to jump over to my TradeStation platform here. This is a stock that I began buying back in here when it started to trade abnormally. There was the abnormal volume, abnormal price action. Then it went up for a little bit, and then it kind of went back down into a trading range. Tested support. I managed to stick with it there. Started buying more when it broke the downward trend line. I actually bought some more there as well. Bought some more. And then look what happened. The trend went parabolic. I sold the stock at 174. Well, I sold it in this range, basically. Why? Because the trend went parabolic. It had run away from the trend line, and therefore I knew that we were going to get that pullback to the trend line. So this is one where I sold it almost perfectly, selling and capturing that profit. Back in here, it was a nice 6-to-1, 7-to-1 type trade. Where is it going to go now? Well, it's right back to its trend line, so it should bounce short term, because if we draw a line like this, we've actually just tickled through it on Friday. That is a bit of a negative, but because it happened Friday afternoon, I'm going to see if it can bounce back. What I want to see next is, does this downward trend line get broken? If we can see that happen, then maybe this moves higher. But for now, I want you to be pretty cautious with that stock. Just kind of how I played this particular trade, a swing trade, beginning back in here in October, adding to the position as it started to work. Well, that has been the Stock Scores Market Minutes for, what is the date now? November 21st, 2016. Hope you liked the video. Please click on the like button if you did. Subscribe to the channel, and happy to answer your comments if you have any. Have a great week in the market and trade well.